Hey guys and dolls, it's Jason. I know that the markets have been absolutely ridiculous and they're having a huge tantrum, so I'm here just to give you some reassurance, some guidance as to what I'm doing with my money right now. Hopefully this message will bring you guys some light and some joy and hopefully a big smile to your face. I did actually forget to bring my cup of tea up here, so I'll be right back with that. Okay, I'm back with my tea. I have an orange vitamin C tea, it's really good. Yum. So, we're going to go through all of the charts and some of our plays that I have currently in my portfolio, and I'm going to explain exactly what's going on with the S&P 500. And yeah, so I know the markets have been very frustrating recently, and I totally understand if you're in the red. I'm also holding in the red, and we've wiped out all of the gains from 2021. It has just been a bloodbath, and what's happened is a lot of institutional investors and selling has taken place over the last 3 weeks. Why is that? Well, on the SPY, which is the S&P 500, that this time last year in March, I'm going to have to go onto the daily for this. Now, if you look at the bottom, you can see that around this time, March last year, we actually did start to have that sell-off. So what does that mean? Well, it means that a lot of institutional investors actually started to buy stocks and move their funds into different sectors, obviously because of a pandemic. So throughout the whole of March, we had that happen. Now, taxes work differently for different countries, but a lot of people in the US, as far as I'm aware, when they actually hold a stock for over a year, they actually can claim taxes back in a very different manner. So what I believe might happen over the next month is we might see a lot of institutions selling those stocks that they've been bag holding for the last year. And that is why we've started to see a bit of a sell-off in the markets. And again, it's just because institutions are starting to move their money back in from growth stocks, perhaps into value stocks. But what will happen, guys, and I've explained this in another video, if you want more information on that video, and it's very in-depth, I would really highly recommend and suggest that you watch it. It has got so much information in from Cathie Wood and some other really important investors, and she talks about how right now there's a lot of value traps in the market. Short term, these companies are okay to hold, but Cathie Wood basically explains how her portfolio is balanced and set up not for a short-term hedge fund manager. So most hedge fund managers think 1 year to 18 months down the line, and that's when they're going to be bag holding their stocks and they're going to be moving and balancing their portfolios constantly around that time period. ARK Invest are concentrating on the future. They're concentrating 5-10 years away. So even though a lot of these technologies right now that they talk about aren't actually out, they will be moving into the future. They are going to be the leaders in the industry, and they base everything off 5-year projections and, you know, moving forward from that. So that is why we have seen a big sell-off in ARK, and what is going to happen essentially, according to Cathie Wood and also according to Meet Kevin, who has over 1.5 million followers here on YouTube. I watch some of his videos most days. He's pretty good. You should check out his profile if you've not. He talks about how, you know, so many institutional investors right now are leading this market sell-off, and a lot of the retail investors like me and you, we're holding in the red. And what's going to happen is once all of this money over these next kind of 3 to 6 weeks, because he describes a sell-off usually lasting anywhere between 3 to 6 weeks maximum, and then obviously the markets usually start to rebound, and that's just from history. We don't usually go into a bear market for more than that. So we're over halfway through. I think the worst of it is probably done. You know, this is not a pandemic like it was back in March 2020, you know, where no one knew what was going on. The whole world was shut down. Like, we are so far beyond that. Vaccination programs have been rolling out. This is just a lot of people rebalancing, moving their money, and interest rates and rising bond yield fears. And Meet Kevin specifically says how a lot of these institutions are now moving into cruise lines and airlines and everything like that. But what's going to happen is now they're going to be overvalued. They have so much debt on their balance sheets, and then all of these high growth stocks that we're left back holding right now in the red, they're all going to be undervalued. And then after the weekend or next week, a lot of these companies are going to start to go, hang on a second, Tesla's not at $900 anymore, it's at $600. It's lost 35% of its value. And they're going to start to repile back into these growth stocks. And it's just how the markets work. Again, you have to remember, if you are investing, why did you choose to invest in the first place? Did you choose to invest short term? Did you invest because you're a day trader? Did you invest long term? For me, I'm not worried about the daily noise and fluctuation of my trades, because for the majority of the stocks that I hold, you know, I'm holding this until 2022, 2023 and beyond, into even NIO, like 2024, 2025. I want NIO to get to 500,000 in production before I even start thinking about selling that stock. That's just how I'm playing this. So if NIO goes down to $25 in the short term, I'm really not worried, because it's not about the fact that I've lost money right now. NIO won't be $25 in 4 years, guys. It's just not how the stock market works. Right now, we are just in a correction. Everything is just, you know, fluctuating around. There's a lot of fear. There's a lot of people making a lot of noise. And we do have stimulus coming again out in 2 weeks. So we'll see how that does play into the market, and hopefully that will act as a catalyst. Now, if I go on to Tesla, you guys can see that we have had this gigantic sell-off, like I said, from $900. We are sitting in the pre-markets around $610. Now, I know a lot of people are talking about valuations right now, and how valuations haven't not mattered in the previous market that we have seen over the last year, and with good reason, because we've had so much money being thrown into the economy. Now, that money hasn't stopped, and, you know, the future of Tesla is kind of priced into that share price. So if we do see any bad earnings, then that's when you're going to start to see a sell-off. But the reason why I believe that the main reason that's caused all this is selling off right now in the EV space, particularly, and the solar space, well, if I go over onto here, you guys can see. So Tesla and NIO believe that there's going to be a semiconductor or, you know, shortage for chips to be able to manufacture electric cars, and that is why we have seen a big sell-off. Now, I really do think that they will overcome this. Yes, this is going to happen, and the other company right now that actually is prepared for this is BYDDY, which is why Warren Buffett is actually invested. Now, I did actually talk about BYDDY back in January twice on my channel, and I am invested heavily in BYDDY, so I'll bring that one up for you guys right now so you can see which stock it is I'm talking about. This is also known as BYD. Now, BYD actually manufacture all of their own conductors and also their chips, so they're not going to have a chip shortage. So all of this selling off right now, again, is just all fear, because if Tesla is the leader in EV, then a lot of those stocks are going to follow down in suit. So if Tesla's selling off, then of course NIO is going to sell off, of course Xpeng's going to sell off, BYD is going to sell off. It's just how the markets work. But like I said, a lot of this is an overplay of reaction. I understand that it is painful to watch, and it's like, ugh, and it, you know, even for me, like I said, I'm down at over £10,000. Is it going to stop this week? I'm not sure, but I think the worst of it is out the way, and I think what will happen over the next 2 to 3 weeks is we will see a small amount of bleeding, and it will start to consolidate, and then once we do have stimulus at the end of March, things will start to pick up. But again, it is just riding out the short-term waves, and no, guys, it's not going to stay like this for 2 or 3 years. I really don't believe that is going to happen at all. You know, we are so far beyond what is coming right now from this time last year, and like I said in one of my other videos, you know, we have over, I think it's $2 trillion tied up right now in just the US economy, because people are not spending right now due to fear. But once everything starts to open back up, that money is going to flood back into the economy, and stock market is going to start to boom. So, you know, we've got so much money coming into the stocks, stimulus, potentially another stimulus after that, and I think that's just going to continue to allow stocks to have these downtimes, of course, when inflation and bond rates are going into the markets. So my camera just turned itself off, so I'm just going to be doing the rest of the video without the camera, as it needs to be charged. But I believe that in the long term, again, we will all be rewarded. You have to be patient, guys, and remember why you started investing. Now, again, could the market still sell off? Like I said, I really don't know what they're going to do at this time. The market is always very unpredictable, but you have to have faith in the reasons and conviction as to why you started investing in the first place. I, for one, am not going to be selling any of my positions. And it's times like this that Warren Buffett always says, you know, be greedy when others are fearful, and fearful when others are greedy. And if you remember back in the March, so many people had messaged me in the summer and said, oh, I wish I'd bought in, you know, when Tesla, for example, was down then, and all these other genomic stocks, you know, they were sold off 50%, cruise lines, airlines. Now we're seeing the exact same thing in high growth stocks and conviction stocks. And, you know, what's going to happen in a year from now when everyone says exactly the same thing after we see a 30, 40, 50% sell-off in a lot of these stocks? It's going to be exactly the same situation. So I'm not worried about holding right now through these downturns of red. Now, again, if you do look at my screen, you can see, you know, it's everyone in the market is bleeding. It's not us, it's institutional investors, it's banks, everyone. There's barely any green here. Like, I think the only sectors right now that are outperforming anything is financials and energy. And I think I'd mentioned that before on my channel, that at the start of this year, that is one of the sectors of the stock market that is actually due to have a raise this year of about anywhere between 11 and 22%. But long term, those are going to be value traps in my opinion. But we will see. I mean, maybe I'm wrong. This is just how I like to invest my money. But we all know that we did have a really big bull run with the solar stocks and the EV stocks, and I've just explained to you guys why the EV sector has stalled off. If you wanted to see another video, then again, be sure to check out some of the other videos on my channel, because it goes into, I think the last video I did speaks about how the wind and solar section was sold off due to the Texas snow crisis that basically happened where they froze over some of the solar stuff, but it was also a lot of politics involved in that as well. So that's what's happening right now in the markets. I just want to reassure you guys some faith that I'm not selling anything right now. In fact, I've bought in some of the dips. If you are going to buy anything, then I would just say, you know, be cautious. I've always preached on this channel, this is not financial advice. I'm not a financial advisor. This is just for education and entertainment only, as I say this in every video. But dollar cost averaging in is so smart. I've never once said on my channel that I'd buy immediate position 100% in. I've always said to dollar cost averaging, and this is exactly why you do it. And I've always preached since the beginning. Those of you that have been with me since I had, you know, 100, 150 followers, you know that I've always said on my channel, being diversified is so important, having your money spread into different segments. Because imagine if you had 100% of your money right now in NIO, and you know you got in NIO when it was $50, for example, you'd be left back holding now of 100% in that stock, and it's currently down. You know, it's going down 5-10% a day at the minute. And when is it going to stop? Like I said, who knows? The bottom of NIO is definitely hit a layer of support right now. I mean, if I bring it up on the 4-hour chart, you guys can see that it's definitely sitting at a layer of support here as I've drawn it, but it's broken through that. So the next layer of support I said was going to be at 39, and it's gone down since then. It looks like the next layer of support from there is around that $32 zone. So NIO could go as low as $32. Who knows what it's going to do? It is currently oversold on the RSI, but again, we are below the 50 on the RSI. We are actually the 200 SMA, you guys can see, and the 21 EMA. When the 21 EMA goes below the 200 SMA, which is the big purple line, this one here, and you guys can see that the thin, this line here that I'm drawing on now, this is the 21 EMA. Once this actually cracks downwards, that's usually when we can see that we are in a negative market, that things have turned bearish. So once this does bottom out and it starts to flatline, it consolidates and we find another layer of support, that's when we know potentially that that would be a buy the chip dip opportunity moving forwards. Like I said, guys, I'm always learning in the stock market, but I'm in it for the long haul. You have to decide whether you're an investor for the long term or the short term. And if you can't stomach volatility, as I've said many times on my channel, then investing probably is not for you. But right now is not the time to panic. If we do see any further sell-offs, which can happen, then make sure you have either a stop loss set in place on your trades so that you can get out of those trades without any further damage or bleeding, and always be patient. Buy the dip if you want to average down, or it's just about waiting out the storm until this nightmare, as I say, is over and we do actually start to see some nice cash injections back into the market and things start to look more positive and bright. I'm going to draw a nice sunshine for you guys. Make sure to give this video a like if you did actually find any of this information useful or helpful. If you would like me to go over any particular stocks that we are currently holding, any of our plays, then be sure to write a comment down below, because I will then start to draw up on the charts for you guys. I'm hoping to do a live session at some point. I also just want to say thank you if you have made it this far. I appreciate you. I hope, if nothing else, this video gave you some reassurance. Stay safe out there in the markets. Don't forget to have your cup of tea, and I'll see you guys back on my channel for some more content soon. Peace.